What's up, people? Welcome back to Invest with T-Claus. My name is Teddy, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, NIO, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So NIO held its earnings call back on March 5th and delivered a surprise beat on expectations. EPS, or earnings per share, came in with a much smaller loss of 39 cents versus the expected 51 cents. That's pretty good. Looking at the headlines, sentiment is overall bullish, but the stock itself has yet to see a solid move to the upside. In fact, NIO is down 3.79% and closed the week at $5.58. It's no surprise that I'm bullish on the stock, but it was interesting to see why some of the top analysts were still bullish on the stock post-earning. And so in today's video, I'll go over some of the latest news on NIO, then take a look at the latest analyst price targets, some changes here, and I'll close with what I've been personally doing as far as buying, holding, or selling. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and a thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. The story around NIO is definitely one that requires patience and a longer time horizon. If you watched my last video, I covered the main reasons why the stock has been and continues to be under pressure. The competition and pricing war are at the top of the list for what's impacting NIO's growth. Looking at the forward guidance they provided for Q1 2024, they expect vehicle deliveries to be between 31,000 and 33,000 EVs. That would represent a decrease of 0.1% to an increase of roughly 6.3% on a year-over-year basis. Revenue is projected to be in the range of 1.479 million to 1.562 million. This would represent a decrease of approximately 1.7% up to an increase of approximately 3.8% on a year-over-year basis. And you have to remember that the month of January and February are typically weak delivery months in China given the holidays. So what NIO is really telling us is that they expect to stay flat for the quarter. If you consider how fierce the competition has been, this is actually fairly decent guidance. As March gets underway, William Li, their CEO, communicated during the call that they expect sales to gradually improve, the main reason being that their upgraded 2024 models will begin deliveries shortly. That in turn will help with margin recovery and drive towards a yearly goal of 15 to 18% margins for 2024. He also reaffirmed the upcoming unveiling of their mass market vehicle brand codename ALPS or ALPS. Now, fast forward to this week, and we now have confirmation for the official name of the new brand. The Chinese name will be Lidao, and the English name will be Onvo. But because nothing can stay hidden for too long, the first shot of the Onvo L60 were leaked, as you can see here on the screen. Launch is targeted for mid-May and deliveries in Q3 of this year. Target market for this EV is families. The Onvo L60 has a starting price of $27,800 and should provide a solid, more reasonable price alternative to the Tesla Model Y. Now, when you couple that with the introduction of the new 75 kilowatt battery pack using only LFP cells, and you can see why many of us, analysts included, are foreseeing upcoming improved company and stock performance for NIO later this year. Speaking of analysts, coming out of the earnings call, Edison Yu from Deutsche Bank maintained his buy rating and previous price target of $9 for NIO. Based on the current price as of Friday, that would be just over a 61% potential upside. His reasoning has much to do with everything I covered earlier, in addition to NIO's current valuation. As it stands, the NIO stock is only trading at 1.2 times the price to sales ratio, meaning that the stock has virtually no premium built into it, making it a bargain at this point. Now, when looking at the overall distribution, we have a consensus rating of a moderate buy. This is unchanged from the last time we spoke and is made up of 15 ratings. That's 5 more ratings than we had previously. The breakdown is as follows. We have 7 buy ratings, 7 hold ratings, and 1 sell rating. The average price target did drop from $10.55 to now $7.06. This translates to an upside of 27.06% from the current level. The top end of the range dropped from $18.70 to now $10.40. And the bottom of the range is also lower, now at $4.80 versus the $8 previously. This, of course, is courtesy of our 1 sell rating. Now, despite the recent struggles from a stock price perspective, the outlook for just about a 100% return on investment still stands when you look 9 to 12 months out. And of course, for many, that's too long to wait, but the reality is NIO has a bit of a challenging road ahead of it, primarily because investors are going to want to see sustained growth in the sales number in the coming quarters, in addition to improving margins, in order to feel confident allocating significant capital. Profitability is still at least a year out. Nonetheless, NIO is well funded to execute on the vision and reach that milestone. As far as I'm concerned, I personally see the current valuation as an opportunity, and I do believe that the Envo L60 as well as subsequent models they will be launching will help drive sales back to NIO. This is actually a genius move if you ask me, on NIO's part as they try to regain a big chunk of their lost market share before Tesla launches their mass market vehicle in 2025, early 2026. And so because I do view this as an opportunity, I did add another 100 shares to my portfolio, slowly building it back up. The reality is there's no need to rush at this point, right? So a little bit here and a little bit there will go a long way. The bottom line and the last thing I will say is this: NIO has some solid tailwind ahead for the stock as we get into the second half of this year and beyond. New models, cost reduction through the manufacturing process, and reduction of the overall cost to consumers by revamping the BaaS price structure, that's battery as a service. From where I stand, NIO is making the right adjustments and executing on the right strategy. It's only a matter of time before the market recognizes it in the coming quarters. And so I'm positioning myself now to ensure max gains later. The question is, what will you be doing? But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.